Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Thursday, July 14th, 2022. It is 3:25 Eastern Time as I'm starting the video, so if I can go through these charts quick, I can get out to you before the close. What we're going to do is a quick update on the equity markets. Nothing's changed there in my views, although I do want to point out some developments today. Go over a handful of trade ideas, some of which I already got out to you today with the static charts, chart images and targets and all that, but also build a little bit more. I told you the pot stocks are starting to look interesting, and I made a comment in there, and this is kind of the segue into my initial part of this video, is these are what I'll call risk-on trades. We've been in a risk-off market for a while. Bear market is risk-off. That favors, or favors being out or short high-growth stocks, tech stocks, things like that. But I've seen a shift, and I think we're going to see a continued shift, or may see a continued shift into a risk-on environment. And if so, then you'll want to own things such as the tech stocks, which I've been favoring since the lows, pivoting the day with the market bottom so far, and I continue to maintain that. So I'm going to go over that. Semiconductors, big tech, Apple, those companies, Microsoft, and Amazon, etc. So also the pot stocks I'll cover, Bitcoin I'll cover, because those are all risk-on assets. Pot stocks kind of march to their own beat from time to time, to their own drum beat. But again, I've been saying this time and time again. My preference is to not try to go off and trade off of traditional correlations, because this market's been topsy-turvy. It's been turned upside down on its head, manipulated by the Fed to the nth degree, and so it's kind of wrecked a lot of historical correlations such as stocks and bonds and things like that. All right, before let's start here. We're on this chart. We might as well just go there. Here's QQQ, 5-minute chart, just short-term what's happening, and I'm going to just zero in here. You're probably familiar if you're actively trading. Yesterday we had a big gap down that was right here, and then they rallied it all up. There was the previous close from Tuesday, Wednesday's open, and they recovered all of that and then some to turn the market green. Now it was a red day, but ever so slightly. Remember, this right there was the previous close. There's right here is where we closed yesterday. So you'll see a red candle on the daily, but for all intents and purposes, it was a flat close. And more importantly, the story, when you look under the hood, shows aggressive dip buying. Dip buyers managed to bring it back up. What happened again today? Again, this is a common theme, and I've been talking on this. Whereas good news is good news, and bad news is being shrugged off or bought up. They're reacting to it. You're at, bottom is a process, not an event. And so if this is a bottom, at least a tradable bottom, I don't think it's the end of the bear market. I made that clear. But looking like we could see more upside in the coming weeks to possibly months here. And so again, JP Morgan, big, like is a 28% or something drop in earnings. One subscriber today posted that they're stopping their stock buyback program. So that knocked the futures down, but right to where they were. And again, I told you today that was a buyable dip. So keep buying the dip, and these dip buyers, it's working so far, but again, I have to caution, a few days doesn't make a trend, but if we continue to see this, and then more, so let me turn off all the levels. I just want to say that we've gone solidly green now, so let's just measure it out from the lows today. Again, this is painful to short sellers that shorted into that, especially if they shorted the gap down today. Then they've already seen a reversal of about 2 3/4% off the lows, and they may ramp it into the close today, would probably be my guess. We'll see. But here's what we need to have happen. If we turn, you can see just little micro trend lines that come into play, but each little breakdown is getting bought up. But what I'd like to see is obviously to kind of start to put an end to this near-term downtrend. Remember, a downtrend is a series of lower highs, which you have here so far, and lower lows. So just in the last few days, this goes back to June 8th here, really when we peaked. It's a very near-term downtrend. But now if we go and take out these highs right here, boom, that's a check mark. Take out, and then the way it works is each previous high is additional check mark. Until then, you can't really get too excited about it. I like what I see so far, but Still very much anybody's game. S&P 500 a little bit weaker, same story, but you have these highs to watch. Look at these previous highs. If we could take that out, and look, they gobbled up the gap down in the S&P. We're almost, haven't done it yet, but close to turning the market green after a big gap down. The gap down to shortly after the open, we're down about 2% in the S&P 500, and now we're about flat, 0.1 right now, a tenth of a percent down, with about another 30 minutes to go. Okay, and yeah, that's what it looks like on the 60-minute chart. This is a near-term bounce target there. But again, when you look at it from this 60-minute perspective, you can see, the bear market continues. There's the downtrends. Just because this near-term, we're off the lows from a couple weeks ago, we still have a lot of work to do, and that work will be boom, boom, boom. Start taking out these highs. If that happens, I think we'll see a snowball effect with the market starting to run. So again, work to be done. But so far so good today, like I said. And today's not over. 30 minutes to go. Do they dump it into the close or do they buy it up? And let's see what happened to JP Morgan. Told you that was a buy today. At support when we gap down to, despite all the bad news, the big earnings disappointment, the if it's true, the cessation or suspension of their share buyback program, they're buying up JP Morgan right now. So far, up about 2%, nothing big, but you got a big level right here. It could pop and run. And again, look, it's not one of my favorite trades. I'm going for I trade beta juice. I like to get, when possible, I think there's more room to run in the tech stocks. I'll go over those in a second. Also, I wanted to just say, loop back to speaking of something that it's not a high beta play. It's probably the lowest beta play I've ever traded. Just to give you an update, yesterday I told you about ZQ on that drop down. This is ZQ, or the Fed funds futures. So this is where at the time they were expecting a 50 to 75 basis point hike, and then on the hot CPI data, instantly, and within a matter of just mere seconds or minutes, all of a sudden the odds shifted sharply to quite favorably to a 1% rate hike, 1% hike at the next meeting, and I told you that was a bet to fade in my opinion. And so I'm out. I just want to say that was the move there. There was a long move. It's not much in percentage terms. It's probably 15 basis points from the low to high, but there is resistance right there, and this is a highly leveraged contract. Each individual contract represents over $400,000 of capital. Of course, it's leveraged, and interest rates don't move very much, but I did want to say there was a little small divergent high here at that 97.60 resistance, so I sold that. And as I suspected so far, again, a day doesn't make a trend, but my theory that the Fed is completely misguided and behind the curve on inflation, reading, using dated sources. Take a look at the Fed funds rates right here, countdown to FOMC. And let me refresh this. So remember yesterday when I went over this is the CME Fed Watch tool. It shows you the probability of the hike. So this right here, remember yesterday, this is the probability of a 1% hike at the upcoming meeting here, and that was at over 75 or right around 75% yesterday. And this was down to about 25%. And so now look, boom, one day makes a quick change. So obviously, at least this point in time, those in the know, and again, usually it's professionals betting on in Fed funds futures, and they overreacted, and then they see, hey, you know what? As of now, Fed, they don't think the Fed's going to do a 1% hike. I'm not saying they're not going to do it. I don't know. I'm just saying it was, a good faded trade right there. Fade that, and the odds are now back below that with about a 60% chance going back to the 50, 75 basis point hike, and less than 40 or less than 50%, about 40% for a 1% hike. And again, why? Well, I'm right or wrong. My theory is that we're seeing that abation, a quick drop down that has not been factored into the data that the Fed is using as of yet. Okay, so I'm going to roll into the high beta or the risk on trade ideas, or just trade ideas in general, whether we turn to a full on risk on market or they're just bounce trades within a bear market. I love bear markets. I love bull markets. So I'll short stocks in a bull market, those that are overbought, and the charts say so. Just like I'll go long stocks in a bear market. In bear markets, the rallies are very powerful because you usually have a lot of short interest, and you get some really good moves, even if they're just bear market rallies, get in and out. So the post today gave you the natural gas. Yes, it was the natural gas trade. Another one, we had one on Tuesday, and here I also in that this morning followed up. And I always encourage you to come into the site and read on the comment section, especially if a topic you're interested in. And crude is closely related. So I said I took, while shorting natural gas, I also at the same time right before that went long crude oil is a partial hedge. Now why? Because they don't always move in tandem. They come out of the ground together, but sometimes one's going up, the other's going down. The overall trends tend to track, but day to day, and I also viewed that as a hedge. So this was CL. Again, you can reference that chart on the site, but this is a 60-minute bullish falling wedge with positive divergence. So remember, we've already had the big drop. That's what I've been highlighting in crude. I remember energy sector a few weeks back, right off the top was my favorite. I made it clear on that, my favorite sector to short, and that has also been the biggest laggard by far without even a close second in the S&P 500. So again, the energy has been moving down, but nothing goes down forever, and I'll trade the counter trend rallies. And so that was it. We were about 93 when I shared the chart. Got in there a little earlier today. Also give you a 60-minute chart showing you that it was on support right here. That's about 91.82, going back a little farther with positive divergence there. And remember, we've had a big drop. So let me get to the current chart of crude. So we did. It's been a nice move up so far, good for about, if anyone took that, about from there, about 5% or so. But we're coming up to that first target there, about 97. So we'll probably get a pullback here soon. But we did break out of the wedge. And remember, big picture is... right here, I'm measuring down from the high. These were the initial targets on the short of crude off the high. It's been a 25% drop, so safe to say there should be at least easing of inflationary pressures there, which are not priced in, because all I read, and I read through the notes, all they did is they cited that energy was the biggest contributor to the hot CPI numbers. And again, they're it takes a while for the refineries to catch up, for prices to come down, and we may get another counter trend bounce. But even if we do, even if we come back up here to this 100 level, we're still well off the highs. So that's just, again, the takeaway, and I think that will or can be the potential for nice catalyst here. So the nat gas trade, I'll do an update there. There's the August, but I gave you the chart was the September. And I did also in that same post, again, that's why you want to go back in there, I gave you a zoomed in version right here of that nat gas trade with the futures. You can see that I zoomed in on the chart a little bit for you to see where the levels are, T1 zone. Here, I'll get to this chart now. That's just the one I posted earlier. So, and there was even a comment, Daisy, one of the members, had missed that trade. Wasn't happy about the entry by the time they read the email or came into the site and saw the post. But there you got another back test to that level. So there was plenty of time to get into that trade. Let me go over it. And believe me, it hasn't even played out yet. I'm just going to show you where we're at. If I can find the updated chart. NG, here it is. So we had resistance at 680 this morning. We had an initial down, but then we popped back up after the trade was posted. And so it's still profitable. We still have the divergence. The same case that could be made is there. And this is T1 zone, which includes a trend line. So you have a confluence of support there. You have a support zone that's 6,323 and 6,403. Again, I'm using the Septembers because traders are starting to roll. Natural gas is a tricky one. They're always a month behind. The September futures expire in August. They stop trading in August. The August futures stop trading end of July. So they almost have as much volume now, these September contracts, as the August. And there's the levels. So if we can break that, hit that first target, maybe get a reaction there, come down to T2, And as of now, max target's T3. But also, like on Tuesday, the other day, if you get a quick swoon down and you hit a target like that, take the money and run. That's what I like to do. And the other takeaway too is have your OCO orders in place, because natural gas moves so fast. If you step away from your desk, even if you're a full-time trader, you're not just doing this part-time because you work another job, it only takes a second for nat gas to zoom down, hit a target, and then reverse. We saw that the other day when cold hit that, popped up and hit the target. Where are my targets? So these are new targets here. So there it was. There's the trade came out this morning, and then you came down, so had another re-entry right on support. Hasn't taken off yet, just needs to clear. Here, I'll show you right here. Needs to pop this level, I think. About 25.75. And then, again, you can swing it up. I think there's a shot we could hit T3. But again, if you get a quick spike, up to you. That other one played out so fast, it was, as I said, a good chance to take the money and run the other day. And good thing we did. Alrighty, next one up. Let's start talking. Let's see, I covered crude, natural gas. Oh, I want to, before I forget, and then I'll get to the stock trade ideas. I definitely want to bring up GDX. Okay, so there's a great example of a bullish engulfing candle that did not get confirmed. As I say, these are only potential reversal sticks. In my book, you got to have the confirmation, and that is exactly not what you see, because that would be that can't be a bottoming stick, because that's not the bottom anymore. We gap down. However, GDX, the miners, I've seen them, traded them a lot in the past. Every now and then you get nice, sometimes you'll get a, what do you call this, island reversal pattern. So you can either have an island cluster or an single island candlestick reversal pattern. And what that is if you get a gap down. So again, it is only, let me repeat, just like yesterday's bullish engulfing candle, only a potential bottoming stick that needs a follow-up confirming stick. And what that would be, you got a gap right here, and if you gapped up tomorrow and you separate, that's why they call it an island reversal bottom, and they also have island reversal top, same thing in reverse. If it's separated by a gap on both sides, or if you get additional candles, then you have the potential to have an island cluster top. Let's say you trade a few more down here and you get this cluster of candles, and then one gaps up above. That is your confirming or buy signal there. So be on the lookout tomorrow, because GDX is close enough in proximity, and so far you saw the euro take another leg down today, but then that whole interest rate thing I'm talking about, that was because we had the big increased odds for more aggressive rates in the US, which benefits the US dollar. But all of a sudden, I just showed you those odds flipped around back again. So 1% is now, it's not off the table, but it's no longer the favorable or the most likely or probable scenario. And therefore, what does that mean? Well, if the euro can still turn around and rally from here, then that should be bullish for GDX, and especially if there's a big movement overnight. I can tell you that right now. If the euro can take off overnight and the dollar goes down, then that would set the stage for a gap up. And it doesn't have to happen tomorrow. It just needs to happen sometime soon if we have that island cluster put in, several candles down there. This is what it looks like on the 60-minute chart right here. This is the one I gave you the other day, the trade setup. And then we had the divergent low. Basically, we just still have the divergent low right now. It's a little bit lower, and maybe a trend line there. Not very well defined, so I don't want to force it, so I'm going to take that off and just say again, watch for this. If we could rally up here soon, then we could still see a reversal in gold or gold and GDX, of course, because GDX is still close enough in proximity to support. When you look at it on a weekly chart, especially, this is GDX right here. You had nice resistance back there. You traded through that level there with support right there, and that's where we're at right there. And you have positive divergence on the weekly and oversold. Last time the miners were oversold, they have not hit this level, the 30 level on the RSI, since COVID hit. And if you bought the miners then, not saying it's going to be the same, that was crazy times with the Fed going a little overboard, but 183% rally. And time before that was right here, we're oversold, stayed oversold for a couple weeks, and from there you've had a rally of about 85%. Time before that was right here, and that was a divergent low. So you had boom, boom, basically a double bottom off that oversold reading, positive divergence, and then followed by a 155% rally. Trade ideas now. Not my favorite, just one I came across looking at charts today. Price for death, it's a penny stock, 43 cents, so don't even think about it if you're not familiar with the risks involved. But, nice downtrend line, and, you get a lot of things that are chock full of heavy short interest right now, and you can get short squeezes and pop. So that's one, but again, wasn't one of my favorites. I just had it on my pad. I wanted to get that one out to you. Then the one I gave you here is a setup. Again, a setup is a trade waiting pending an objective entry. Now this one did break out. You can make a case. And I started, took a small starter position, but I plan to add and bring it up considerably if 452 is taken out with conviction. So what you have here on GRWG, it is a pot stock, grows marijuana, and obviously legal cannabis. Pop above 452 should take you up to T1 and then potentially T2, and doesn't look like a lot, but if T2 is hit, that's going to be about a 50% gain there. So it's all about risk reward. It could continue down. It's in a downtrend, so don't get married to it. But and again, no buy signal yet on that one. The one that I did give you with a buy signal, I'll loop back to the pot stocks in a second. That was Shake Shack. This one has looked it up. It was about over 11% of the shares of the float, meaning all the shares out there that are publicly trading are short. Was about over 4 days to cover. That means if every based on the recent volume, it would take 4 days for short sellers to cover their positions to get to clear out all that short interest. And what also you can notice here, see this candle right here, right? If you maybe can't make it out in the video if your monitor quality is not real good or bright, but there's a big volume bar there, and that's what you want to see on a breakout, is increased volume. So impulsive, so far so good. Coming up on that first target, 46.90. Second target and downtrend line is what I'm preferring here, especially if we can get some additional check marks in the stock market. You're going to start to see a lot of low price beat down, overly heavily shorted stocks, especially with nice chart patterns start to explode. I'm talking explosive gains on some of these guys. If T2 is hit, that's going to be about a 38% gain on Shake Shack. Let me go back to the pot stocks because I kind of teased you with them earlier. I didn't even mean I should look at MJ. I haven't even pulled that up in a long time, but I just saw it on my watch list. So we were building divergence before. We've got some now. RSI divergence and a pretty steep downtrend line. So there's MJ, the cannabis ETF. So if I can pop that, it should run. I would, there's a lot of levels I could give you. But I would say if you're going to swing it up, if we can get some traction, the two targets I'd give you are right here. That reaction high about 660, and maybe a zone, actually 660 up to about 688, and then 826. But the ones I wanted to show you are the big names, and that would be this one I didn't even update yet, but I didn't update the chart. Let me give you CGC, Canopy Growth. You have a bullish engulfing stick, so just like GDX, which we never got, but what you want to be on the lookout for is another green candle, positive close tomorrow to confirm this as a potential bottoming stick. And I don't even see this thing blinking. There's minor resistance there, but up until we test at least the bottom of the gap. And so from where we're at today, the bottom of the gap is about 23% above, and then technically the top is where you closed the day before, but I always put I see a lot of reactions there, so I would be targeting about 330 there. That'd be about a 37% run if hit. Another big one is Tilray, crowd favorite among the pot stock fans. We've traded this one many times over the years, long and short. There's your nice divergence, building, positive divergence. Big impulsive move today, high volume, what you want to see, but right into resistance. So this one needs to pop 370. Let's see, I'll give you a target around this level here. Some resistance there, so I'm just mark these levels that are likely to produce reactions. 425, about 480 or so, and let's just look at those for now. I'll revisit these if they even break out, and that's what I said earlier. You need to see not one but multiple cannabis, these leading stocks I'm covering, break out. There's Chrono, CRON, nice downtrend line, big bullish falling wedge pattern, and if it can pop it, minimum target there is 356, which is about, from where we're at now, about 14 percent. Then you got about 31% up to that next target, about 407. And if things get running, maybe all the way up here to 512, that's going to give you, if hit, about a 62% rally. And again, it would help to see the market return back to a risk-on environment, which is dependent on the NASDAQ 100 and the S&P 500 starting to take out some of those recent highs, because as that happens, you're going to have more and more shorts squeezed out. Even the last couple of days, you know, this big gap down probably sucked in some more shorts, and then boom, they get reversed. But it's still nobody's game. Nobody's really won overall, because we haven't gone anywhere in the last few days. We haven't gone up or down much. We've just, you know, taken back the big gap downs, but we haven't really built on those gains. So that's what I'm looking at. And then finally, last but not least, waiting to see a return to risk-on environment for Bitcoin to run. GBTC, it's carving out. Well, I can't say it's carving out a bottom, but it's certainly consolidating in a pretty tight range. This tight range is going to act like energy, like a coiled spring, and these things can break either way. That one broke to the downside. Boom, 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 boom. About a month or over a month of consolidation. Same thing here. And you know, maybe it breaks to the downside, but if it breaks to the upside, it should be a relatively quick backfill of that big old gap there up to about $18. And from where we're at today, if so, that's going to be about a 39%, and then ultimately the trend line above that, I think, and also the top of that range. I know I have a lot of lines on this, I haven't cleared it out. Bitcoin futures, BRR, if you trade the futures, same thing. I'm maintaining this target zone. I laid this one out as a trade idea back here. It hasn't gone up, it hasn't gone down. It's just moving sideways again in a range right here. Positive divergence at the recent low. It needs to pop these highs and run. You have a downtrend line that's likely to come into play first. Now that's going to come in a little bit below my target zone, so maybe a run up there, hit the trend line. Here, let me show you. Run up, hit the trend line. Maybe not, get a reaction, and then run up here to that target zone right there, which is, can't grab the line. I can do it this way. Make a line, add it there. Yeah, it's about 35% up to that target zone if hit. ETHE, Grayscale, Ethereum, Trust, same thing. Look at this range right here. So if it can pop the top of that range, you've got a back test to the primary uptrend line, and that's what I like about it. These two levels come in roughly together, and that bottom of that gap there, or the top of the gap, about 1049. It should be a quick shot up there, about 22% in Ethereum, and this is what the crypto itself looks like. I've got a chart of it here. ETH, if you want to buy the raw crypto. This is a 6-month, 3-hour candlestick chart, but look at that, just ping-ponging around between this level here and a breakout minimum. You know, there's a bottom of a gap there, but and you might get a reaction, but I think they'll run it all the way up here if we can break out above there. 1719 is that level, and that'd be about 45% run in Ethereum. So again, Maybe, maybe not. And the thing about it, you know, you want to take a starter position here for 45% gain. So you say, okay, I'll give myself a 15% stop loss. Although the 15% stop loss would be just a take you down to the bottom of the range. So the way you could do this one is if you wanted to scale in here, scale in down to, but not below the bottom of the range with a stop somewhat below it. So you're lowering your cost if it goes back down. But if that's it, maybe it doesn't go back down. Maybe all these were the final. This one was a final check, and so then you can add also on a breakout there, and then set your stops accordingly. All right, that's it. Crypto, pot stocks, a lot of junk stuff. Beat down, Shake Shack. Maybe they pan out, maybe they don't. But doing a pretty good job of spreading it around lately between everything, commodities, bonds. I've been in and out of treasury bonds lately. That's been a good trading vehicle with the volatility, and continuing to, actively trade the NQs in my trading account, and then sitting tight on the, longer term accounts for now, and those long positions I pivoted into a few weeks ago, and we'll let you know if and when my outlook changes. This has been Randy Finney with Right Side of the Chart. Have a great day.